David Morgan of The Morgan Report is here to talk about silver today. David, retail investors can't even buy silver bars and coins right now. The physical demand right now is so high, there's no supply. What's going on?
Well, you already answered your own question, David. Yeah, there's so much demand that it can't be filled, and it's going to be back ordered.
Let me rephrase my question. Why is there so much demand right now?
Well, it's a combination of things, but primarily it's this Wall Street's bet group that proved that if there's enough buying power, they can take out these short sellers. Nothing has been sold short stronger and longer than the silver market. So somebody in that group or somebody's in that group, it's my understanding, said, hey, let's get to the silver market. What's interesting about the silver market is it's not a stock. So you don't need a brokerage account. All you need to do is phone up Kitco and place an order. So there's no, double checking or waiting, a week for your paperwork to clear and you can have an account. No, just call up and say, I want to buy some silver. When they call up and say, I want to buy some silver, say, that's fine. It's going to be, I don't know what it is. I won't misquote you, David, but Kitco may say 4 weeks, 6 weeks, 8 weeks. I don't know. We've seen this before. It happened in the 2008 financial crisis. Silver hit about $9 and we're paying about 13. It was like a 30% premium on most silver retail products. But it was a silver retail product shortage, not a silver shortage. The silver market is quoted on commercial bars. We're not short of commercial bars yet, but there was such a demand for commercial bars for big investors because they look at 1,000-ounce bars the way, big investors look at 100-ounce bars. It's just a bar of silver. I'm going to buy this many. And there was over like 300 million in the SLV last year. This is unprecedented. There's nothing been nearly that much investment demand for commercial bars ever that I know of. And so now we're seeing this Wall Street's group, Reddit, all the chat rooms. I mean, basically the silver market's on fire in social media. People that were never aware of it or given up on it or never thought about it. And so you got this kind of adjunct group, David, this group of people that got burned in the 2008 financial crisis, got hurt in the stock market crash. They lost their pension. They got kicked out of their house. And now they see a way to buy silver and kind of get even, if you might think of it, by buying something that's real. And it's easy to do. So there's a huge demand right now. And how long will it last and how high will it go? No one knows right now.
Here's what I don't understand. The short squeeze in silver didn't start today. It started a few days ago. And of course, today is sort of an escalation of what's already been happening. But if you make parallels to GME, the stock, GameStop, AMC, if we're making the assumption it's the same crowd of people, the Wall Street bettors pushing it up, well, those stocks went up 10 times more than that, 10, 20 times in a matter of a week. Silver didn't move nearly as much. In fact, today, as we speak right now, since the 6 p.m. Eastern time open, it's only up about, $2? So I don't know. If you made that assumption, you'd be disappointed at silver's price right now. Are you surprised that it didn't move up anymore?
Not at all. I mean, I spoke with someone that was intimate with the Hunt brothers. He called me. I've known him for years. We don't chat that often. And he asked me what I thought about all this. And we both agreed that, I believe and can prove and wrote in the book, The Silver Manifesto, all markets are manipulated, but silver probably more than any other. And we agreed on this phone conversation that, you're going against some pretty tough people when you're going against professionals on Wall Street that short stocks. But when you're going against the master manipulators of all time, which is the silver shorts, you're up against the greatest sharks out there. Doesn't mean it can't be done. The Hunts proved it can be done. All they did was buy physical and futures.
I don't mean to interrupt you, but who are these greatest sharks out there?
Well, we don't know exactly. It's basically the plunge protection team. You could look at the work that GAD has done, which would probably do more deep diving than I can do off the top of my head, but it's basically the working group on financial markets. It's the head of the SEC, the CME, the CFTC, and all these, entities, and most of them are doing a job that their job description would be to protect us, but really it is to not protect us. It's to protect the big moneyed interests of Wall Street, not the investing public. So that's been turned around by this Wall Street Bets group. And people are starting to wake up and see it's not just the precious metals that have been suppressed like this. It's basically almost anything you want to name, GME being a prime example.
David, I asked this to a few other guests already, and I'd like to get your opinion. What if we had to push silver, the futures market, up 10, 20 times like GameStop and AMC. What needs to happen on the demand side? How much more volume do we need to see in the market right now?
No one knows. I would say if we doubled what we saw last year. So in other words, first of all, no one sells. You can't have any selling pressure, whatever. Okay. So everyone that owns it now is waiting for delivery holds. Now, on top of that, if you got somewhere in the 250 to 350 million ounces, what we saw go to the SLV last year, and no one's selling at the same time, I think that'd be enough. I think the market's that tight. Obviously, the retail market's that tight. How tight is it in the silver market, the silver commercial bar market? Right now, all the bullion banks only have about 150 million ounces that's in the registered category. So if we double that to 300 million, you take everything off of what they own in their name, so I think that'd probably be enough. It's a pretty small amount. But what will happen, we've already had a precursor several times, David. We saw it happen to the Hunt brothers who changed the rules. The rules already exist on the COMEX that you can only take 1,500 contracts in any delivery month, which is only 7.5 million ounces of silver. Now, Craig Hemke's done some good work there, drilled down, because there have been delivery months that have gone over that amount. The last thing the COMEX wants to do is default, but by their rule book, they never can. Because by their rule book, they'll just say, look, it says in the case of a force majeure, you have to settle in cash. We settled in cash. We did not renege on the contract. That's the paper game you're playing. Ultimately, in the paper game, if it gets to the point of no return, they'll give you paper for paper, but they won't be able to deliver silver. That's what we're shooting for. If that were to happen, I'll just finish quickly, you'll go to a cash market. We used to have a milk on the futures exchange, eggs on the futures exchange. We have a milk and egg market today. It's a cash market. It's a free market, more or less, that you need the eggs, you need the milk. What are you going to buy today? You're going to pay this amount. Okay, deal done.
The retail market that's pushing the stocks or the price up. Now, this market, are they moving into the paper market, the futures, or are they moving into the physicals? Because there is a difference here. What do you think is going on?
Absolutely a difference. Going across the board. The big money's going to the SLV. There was I think it was 35 million ounces Friday. That's a lot. That's 1/10 of what took place all year last year in one day. And last year's 350 million ounces. I don't know the exact numbers. The silver studies aren't out yet, but the Silver Institute kind of leaked the number. So I'm using their number. So that's unprecedented. Just think if that went 10 days in a row, David. You'd be looking at the highest amount of silver deliveries ever last year, 2020, with some clear vision in the silver market, taking place again this year, which I think looks like it's possible. Now you've got a problem. You're not going to be able to make good on all that silver in physical form. In derivative form, it's unlimited. You can make as much paper silver as you want. And as long as people are satisfied with paper silver, the game could continue on indefinitely.
Mm-hmm. Okay. Now, here's what I'm wondering. Right now, there's a lot of demand. Brokers, bullion dealers are unable to satisfy their demand. Their inventory is just not there. I wonder if what we're seeing right now, 2909 is the latest reading, the latest price I have on my screen. I wonder if that's the fair value of silver right now, assuming that there's no demand, assuming there's no physical supply in dealers' inventory.
Yeah, it's a great question. I'll have to give you my answer. Remember, I'm a bit biased. I'm really pro, precious metals. But what will happen if this continues on for, weeks is that commercial bars will be turned into physical rounds or other products. For example, here's an example from me, myself, and I. That's a half-ounce silver round that I had minted by a mint for myself, my old website before TheMorganReport.com. That's $9 silver. I bought commercial bars off the exchange, shipped it to my mint master friend. He turned mint around, and it cost me about 50, 60 cents for each one of those. But, I paid, $10 an ounce instead of 13 at the time. So that's what will happen if the demand stays there. So really it comes down to my thinking, if there's conviction behind this market, or are we just looking to run the stops the other way? Are we looking to take care of the shorts and teach them a lesson, or are we in this for the long haul with conviction?
Okay, well, price action right now as of 6:52 p.m. It's gone down actually. So it was at $29 now. It's at 28. So it just went down 90 cents since we spoke. 2 minutes ago. So there's a lot of volatility up and down. It looks like it's on the downside right now. Is $30 the resistance level, do you think?
Yeah, there was a lot of silver after the peak in 2011 that hit about 50. And there was a lot of silver traded around the $30 range for about a year.
Oh.
So there's a lot of people that are stale longs, they're called. This is from 2012. And when silver gets back to 30, they're willing sellers. It's like their wives has been on their back. Why'd you ever buy silver at 30? Oh, it's never going to get back there. Oh, wait a minute. It is back at 30. I'm going to sell it, you know? So there will be some overhead resistance. I don't think it'll last that long. It could go a week. It could go a month. I don't know. The market knows. But I don't think there's a lot of people at that level right now that are, you know, on the internet that are going to want to sell, even if they are just breaking even, because any buying pressure beyond 30, there's not much upside resistance, which means any new buying pressure, even if it's small, will drive the price higher. Problem is there's so many derivatives in the silver industry. There's so many ways to take an ounce of silver and divide it and fractionalize it and hypothecate it and rehypothecate it. And a lot of people that own silver have got these pretty certificates and have had it in a warehouse forever. And I shouldn't say warehouse. I think all the COMEX is there, but some other, let's say, other places, and they're safe and secure. And all they really have is a paper certificate. They really don't own the silver. And unfortunately, silver's in size can be bulky relative to gold. So you have a lot of, let's say, paper silver that really doesn't exist physically. And that's a shame because we really want an honest market across the board in all markets, not just the silver market, stock market, you know, commodities market, the housing market, any market. We want fairness.
Okay, David, you know, right before we were speaking, I'll tell you what I was doing. I was playing online chess with my friends, okay? And then I went on the call with them. I said, look, I got to stop this game. I got to go to work and talk about silver because the silver market's about to blow up. This was a couple hours ago. And they're like, really? What's happening? Should I buy silver? Should I buy silver? I don't have an answer to that, guys. I'm going to ask the experts. I'm going to ask them if we should be buying silver right now. I'm going to wait for the price to open at 6 o'clock, and then I'll let you know. So what's the answer? Should they be buying silver right now at these levels?
Yeah, I think it's okay. I would say, you know, it depends what happens in the future. No one knows. I've studied monetary history as much as a lot of people, more than most. And I'd say anything 30 or under, you're probably safe long term. I'd say very long term, probably anything under 50. Once the monetary reset takes place, and no one knows exactly how that's going to look, I think the precious metals will be revalued. If you look at Jim Rickards, which is a pretty strong thinker in this area, he did an interview recently and quoted, I think, $15,000 gold. So, I mean, if you gave the 15-to-1 monetary ratio, they'd give you $1,000 silver. I'm not saying it's going to the monetary ratio, but I'm just suggesting that if you had $15,000 gold, and he says that over and over, I'm not even agreeing with him, but his math is correct. Then you can think about where silver will be. And he doesn't say 15,000's, you know, out 100 years. He's talking about, you know, fairly near term.
Well, I guess my friends are kind of worried about the short-term price movement. You saw what happened with GameStop and AMC. It kind of hit a resistance level. Well, they both hit some sort of resistance. And I wonder if the same thing could happen to silver. You know, once we've seen this action right now, what's the next step in the next, what makes sense to you is what I'm
yeah, it's hard. I mean, I wish I knew. I'd love to know. I mean, I got an order in myself, and my dealer called me because it might jump $3. I was thinking it could hit 30 on the open, you know, go from 27, whatever it closed, and bang, it's up $2 or $3. I said, I'll put a limit 30. If it's over 30, I don't want to buy it. But what could happen is the commodities market trades a lot different than the stock market. And so the ability to take on these shorts, even though it's more heavily shorted than the stock market. You know, I think it was GameStop was 140%. And the reason it's over 100% is you can have options. So it can make it more than 100%. Silver's way beyond that. But how many people are going to take those 1,000-ounce bars off the exchange and really force the issue? And the answer is to be determined. We don't know. The retail market could make it happen, as I said earlier, if they have conviction. But they're going to have to wait for those 1,000-ounce bars to be turned into retail product.
Okay. Final question. Now, you talked about silver being the Achilles heel of the financial system way back 2012. What is that all about? What do you mean by that?
Well, you know, the old adage, he who owns the gold makes the rules. And for the large part of the old financial system and probably something to do with the new one, gold is going to play a part. But central banks own most of the gold, or more than 50%. There's no real central bank exposure to silver. It truly is the people's money. So if you believe what I believe, that money is power and money is control, and you want to have control of your life, especially your financial life, you would dive into the silver market because that's the people's money and you have control. The banks don't. So you actually could overpower the banking system with the Achilles heel, the fact that they don't have silver as a monetary asset. The people vote with their fiat and say, yes, it is. And all of a sudden, they've turned the tables on the financial system. So kind of an interesting video. You might look at my, type it into, I guess, YouTube, David Morgan, Silver is the Achilles heel of the financial system.
Mm-hmm. Where else can people go to follow your work, David?
Just morganreport.com, get on our free list. I'll be making a video every day this week. I'm committed to kind of get us through this first week, see what really happens, if it's a bunch of hot air or it's the real deal. I'm not sure yet, but it looks like it's real.
Well, I bet either way, I'll bet you'll have a very busy week. I appreciate you. I know you have a very busy evening with your phone blowing up, so I appreciate you giving me your time tonight. Thank you for coming on.
David, it's fun with you. Thank you.
All right. We'll talk again soon, I'm sure. David Lynn reporting for Kitco News. Stay tuned for more updates.